First up, the roster of startups looking to go public is growing with an increasing focus on food delivery-related service companies. I'm looking at one called Olo. What do we know about Olo?
So Olo is a back-end software company that powers a lot of the apps you use when you order a cup of coffee. It's likely that it's powered by Ollo softwares. They work also with food delivery companies such as Postmate, Uber Eats, and they're looking to go public in 2020. So software has been a hotspot in the IPO market in the past 18 months. And this one is a combination of a very trendy topic, food and software.
Honestly, the fact that people are ordering coffee online is kind of amazing to me. Which investment firms stand to gain if this is a successful IPO?
So Union Square Hospitality's Danny Mayer, he is on the board, and so as the Rain Group and Tiger Global, they're also investors. So when we see this go public, we'll likely see them realizing some of their gains.
I'm wondering whether more companies are starting to eye IPOs relative to what we saw last year, based on some of the high equity valuations that we saw, despite perhaps the underperformance of some tech IPOs next year.
So last time, 2019, in the beginning of the year, we already had a very good insight into what's going to happen. We had the Uber, we had the Lyft, but now, we're not we don't have that much visibility yet, but we do know that there is the Airbnb that's going to come. We do know that there's Olo, and then we reported that Topgolf, a leisure / food business company, is going to come to the market. So we will see a good stream of IPO coming, but maybe not as much as a blockbuster as 2019.
Yeah, Topgolf being a putting and partying kind of company. Let's turn now to the direct lending industry. Kelsey, the latest entrant to this is Sound Point Capital Management, which rose its first fund committed to this strategy. What is this fund? What's the goal? How big is it?
So the fund is $500 million, and the goal is really to invest in companies that are going through some type of transition or turnaround, so they're not quite distressed, but maybe stressed or trying to grow, but don't want to dilute their equity.
Is it surprising that it's a hedge fund raising a direct lending type of fund?
No, so basically as hedge funds have faced headwinds, everyone is kind of streaming into private credit where they're still seeing a lot of opportunity, not only in the kind of more vanilla strategies, but in some of these more niche type of plays.
So if hedge funds are getting in, private equity funds are getting in, direct lending specific funds are there, how competitive is this space right now?
So across the board, it's still very competitive, but certainly in some of these more niche strategies where we're not talking about growth companies, we're talking about companies that are maybe having a little bit of trouble or need a little bit of a boost as they transition, it's definitely less competitive and the returns are much higher.
And the line between private equity and hedge fund seems to be getting narrower, right?
Yeah, definitely. And especially when it comes to private credit, everyone's going there, and we'll see how it all shakes out in the end.
When you talk about distressed companies, one area that a lot of people have focused on is the oil and gas sector, and it's been a pretty contentious area within private credit and beyond. Blackstone is taking a bullish stance, at least with respect to one company. Allison, joining us now. Can you give us a sense of what this is?
Yeah, so Blackstone really bucked the trend that we've seen in private equity away from oil and gas. They actually recently committed to giving Vine Oil and Gas, one of their portfolio companies, a $280 million loan. They signed that agreement at the end of last year, and it really kind of says that they still have faith in this company and see an opportunity here as opposed to trying to get out of it.
So I'm wondering whether you have seen the same kind of boost or gotten any signals that the private credit side of oil and gas investments has seen the same kind of gain that we've seen in the public credit markets tied to energy in the wake of higher oil prices.
That's certainly something that people will be watching for. I think at this point, it's still too early to say whether or not, private credit will move meaningfully into oil and gas this year with the rally in the oil price. But certainly, we're already starting to see some public companies or some companies come to the public markets, to refinance existing debt. So we may see more of that trend in private credit this year as well.
I'm wondering whether the increase that we've seen in oil prices is a long-term benefit to these companies or whether it's a shorter-term benefit, given the fact that it could be transient and that they all face a pretty narrow window of profitability.
So it really just depends if the rally can last long enough for them to potentially lock in hedges for the oil price, which would essentially allow them to get a higher price for their oil, even if this rally doesn't last. If they are able to do so, that would allow them to boost cash flow. They could potentially fund more capital expenditure. So that would be positive. But again, it's something we're still watching. It's a little early in the trend to know for sure.